Okay, and welcome back, students who are taking Math for Business and Finance Math Applications. We're doing Chapter 9, Payroll, and we left off talking about deductions. We got through the first three, so let's see if we can't get through the remainder in this video. Okay, so for our deductions, we had federal withholding, state withholding, and local withholding. And again, the federal we're going to cover in a lot more detail in a few other videos. So we did our state and local, which is nothing more than a percentage. The next thing that you're going to have a deduction for, that most people have a deduction for, is FICA. All right, and FICA is made up of two parts: Social Security and Medicare. Okay. Now, this here is I'm going to present the amounts here. Okay, and I'll explain how this kind of like works. But I'll be using the blank slide. So Social Security in the textbook, all right, it says that the rate is 6.2% and it gives you a base of $110,100. Right? Now that's in the textbook. If you actually look at the tables for the year 2015, the base rate is actually $118,500. Okay, and for Medicare, the rate is 1.45%, and the base is unlimited. For 2015, the base is still unlimited. Okay, so even though we're using the numbers that are in the textbook, okay, and those are the numbers that you should use in order to be able to calculate any of the problems in the textbook and on the test, just realize that in the workplace today, there are slight differences. For example, the base being 118,500, which most people, never get to. I mean, you're talking about anybody who earns over $118,500. Okay, it's going to affect them. So the vast majority of people don't make $100,000 a year. Right? So let me kind of talk about FICA a little bit here. Okay, let's see here. FICA is Social Security and Medicare. Right? And we had said that Social Security was a percentage of 6.2% and Medicare was 1.45%. Okay, now here's the thing. That's 7.65% total, right? Here's the thing. FICA is a tax by the government, right? Now, what FICA does when they go talk to the business is they say, Mr. Business, we want you to we want you to pay for Social Security and Medicare a total of 15.4%. Okay, one half of that, is going to be the employee's responsibility. And that's why for Social Security, you have a withholding of 6.2%, and for Medicare of 1.45%. The other one half is the employer's responsibility. Right? So for Social Security, the employer has to kick in an additional 6.2%, and for Medicare, an additional 1.45%. Okay, which makes 7.65, right? And of course, when we add those two together, we end up with 15.4%. Okay, so if you were paying attention to the first video, I had said most people think that when they go to work and let's say they get hired for $10 an hour and they work 40 hours a week, that they get paid $400. Well, that's not true. Okay, they actually get paid greater than $4 an hour. Okay, for the simple reason that the employer has to pay towards their Social Security and their Medicare. So 7.65% of $400 is an additional $30.60. Okay, so in reality, yeah, the employee is saying, okay, I get $400 in gross pay, and that's what they think they're being paid, and then they have their deductions, and they end up with their net pay. And let's just say that's $300. That's what they think they're getting paid. They think they're being paid $400, and their net pay is $300. That's their take home. But the reality is that they're being paid the $400 in gross pay, but the employer is paying an additional $30.60, okay, towards their Social Security and their Medicare. So in reality, they get paid $430.60, not $400. That's from the business's perspective, okay? But the employee never sees this here additional $30.60, okay? And so therefore, they're oblivious to it. They just think, oh, I get paid 400, when in reality they get paid more than that. And that's also part of a determining factor of how much the business decides that they're going to pay you, as a salary, or piece rate, or, as an hourly wage. That all has to be factored in. So these are just two, additions to what you get paid. As we move forward and we get down to the end of this theory, you're also going to see something that's called FUTA and SUTA, okay? That the employer pays additional amounts that are going to add to, what you get paid. So you're going to end up being paid something that's greater than the $430.60 as your bottom line, okay? But you only, most people only think they're being paid $400, when in reality it's probably going to be closer to like $435 to $440, okay? So let me erase some of this here. And go about the discussing this, okay? So let's say you get paid $1,000, okay? Now I'll use Medicare first, because let me actually erase all of this here. Start new. And I'm going to use Medicare first because it's a lot easier to understand. Okay? So Social Security, we're talking about 6.2%, and Medicare as 1.45%. Okay? And for Social Security in the textbook, we had a limit of $1,100, and Medicare was unlimited. Right? All right, so we're going to talk about Medicare first because it's easier to understand. Right? And what that means is that no matter what you're paid, okay, you're going to pay 1.45%. Right? So if I'm being paid $1,000, I'm going to have deducted 1.45%, or $14.50. That's going to be my deduction for Medicare. Right? And each and every paycheck, I'm going to have that 1.45% deducted. Okay? That's relatively simple. But now, let's talk about Social Security. I'm going to present the calculation first, and then I'm going to discuss the limit. Okay, so let's say you get that $1,000, and the way it's calculated is you take the 6.2%, and that would end up being $62. Right? Right? That's how much will be deducted from your paycheck for Social Security. Okay. Now, there is an issue with this, and the issue is this here limit of $110,100. Right? And the way we look at this, you have to look at this from this perspective, and this is the way I visualize it. On January 1, everybody starts out with $0, okay? And they work, and they get paid, and they have taxes withheld, and they get paid, and they have taxes withheld, and paid and taxes withheld, okay? Now, here's the thing. Up here is this limit of $110,100, sorry, dollars, okay? Now, most people never reach that limit, okay? So let's say you get paid, I don't know, $4,000 a month, okay? So let's call this January 31st, and you're being paid $4,000 here. Okay? Well, your year-to-date, which I'm going to put in this column, at the beginning of the year is $0. But when you get paid on January 31st, okay, your year-to-date is the $4,000. Now, when you were paid this $4,000, because it's still below the limit of $110,000, you're going to be taxed the full amount on the $4,000. So 4,000 times 6.2%, which is 4,000 times 6.2%, which is $248. So you're going to have the deduction for Social Security of $448. All right. Now, the next month comes along, 2/28, and you're paid $4,000. Okay. Well, your year-to-date wages before you were paid were $4,000. Okay. And you paid your tax on that $4,000. You paid the $248. Now you're being paid a new additional $4,000. Well, what portion of that needs to be taxed? Well, because you're still below the limit of $110,000, all right, you're going to have to pay the 6.2% on that full amount of $4,000, or another $248. But now your gross wage is $8,000. Okay, and we can continue on doing this, for all 12 months during the year. And we know that 4,000 times 12 is only 48,000, okay? And since that's below the 110,000, we know that each and every paycheck we're going to have to pay that Social Security tax of 6.2% and have the deduction of $248. But let's say that you're the owner of a company, or you are the an executive or whatever have you, okay, and you get $10,000 per month as a salary. Okay. Well, on your first paycheck, you're going to be paid the $10,000, okay, and since that $10,000 is less than the $110,000, right, you're going to pay 6.2% of $10,000, which is $620. You're going to have $620 withheld, okay? And your year-to-date wage on January 31st now is $10,000. When you come to February and you're paid $10,000, okay? Well, that full $10,000 is still below the $110,000, right? So you're going to again pay the $620 on this $10,000, and now your year-to-date wage is $20,000. And to further the example, in March you're paid $10,000, and since that is still below the $110,000, you're going to pay the $620 on this $10,000. Because remember, these other $10,000 you already paid, you already had your deduction taken out. Okay, so you're at $30,000. And instead of going through all 12 months, let's get to October 31st, where you're paid $10,000. So in September, you had $90,000, right? On 9/1, your year-to-date was $90,000. 9 months times 10,000 is $90,000. Okay? So on October, you're paid an additional $10,000. Right? Well, how much of that $10,000 is below the 110,000, all of it. So again, in October, you're going to pay the 620, right? And your year-to-date wage is now 100,000. November, 30 days out, September, April, June, and November. So in November, you're paid an additional 10,000. Okay. Well, how much of that 10,000 is below the 110,000? Well, all of it, because you had a year-to-date wage of 100,000 and you were paid an additional 10,000. That means so year-to-date you were paid 110,000. Okay. So that full 10,000 is now falls underneath the tax deduction. So you're going to pay the $620 just like you did for all of the previous months. Okay, and your year-to-date wage now happens to be 110,000. Okay, all right, now it's December 31st and you're being paid an additional 10,000. Now the question is, how much, let me erase that to maybe make it a little bit more clear. Okay, so now it's December 31st and you're being paid an additional 10,000. Okay, now how much of that 10,000 is taxable? Well, to go from right here at 110,000 to get to 110,100, right? The difference is only $100. Anything above the $110,100 is not taxable. Okay, so you only have to pay tax on that $100. Okay, so $100 at 6.2% is only $6.20. So that's the only amount out of this full $10,000 that you're going to have withheld for Social Security. Okay, so the whole idea here is, I'm going to erase some of this to make it a little bit clearer. Okay. If we're in the month of November and we get paid $10,000, okay, that means our year-to-date is $110,000, right? And that $10,000 that we were paid is still below the 110, so we have to pay the full amount of $620. However, when we come to December and we're going to be paid an additional 10,000. But the question is that at this point in time, right here, we had a year-to-date wage of 110,000. Okay, so the difference between our year-to-date and the limit of 110,100 is only $100. Okay, this additional $9,900 that's above this limit is not taxable. Only the amount that's below this limit is taxable. And that's why we pay, $100 times 6.2%, and we would only pay have a deduction in that paycheck of $6.20, not $620. Okay. I'm at almost 20 minutes here, and I'm going to give one more example here to try to explain this, because a lot of students get stuck on this. Okay, here's my limit of 110,100. Now, understanding this concept is important, because in the future, in one of the future videos, I'm going to be talking about FUTA and SUTA. Okay, and they have limits also. Their limit happens to be $7,000. So, we're going to use this concept and idea again, so make sure you understand it. Okay. Now, let's say, to make things easy, let's say the person, the owner of the business gets paid quarterly. It means every 3 months. Okay. And they get paid $30,000 every 3 months. So at the end of March, they're paid $30,000. Okay. Their year-to-date is $30,000. Okay. So since all of that amount is below the $110,000, they're going to have a deduction of 6.2%. 30,000 times 6.2% is $1,860. Okay, so that's their deduction. Right? Now, June 30th, they get paid $30,000 more. Right? Is that $30,000 that they're paid below the $110,000 limit? Yes. So they're going to have $1,860 deducted, and their year-to-date is $60,000. September 31st, they're paid $30,000. Okay, is this $30,000 right here still below the 110 limit? Yes. So they're going to have the 1,860 deducted. Okay. Now, December 31st, they're being paid an additional $30,000. Okay. Their year-to-date was $90,000 at the end of September. Right? They only have to pay tax up to the $110,100 limit. The difference between here and here. So 100 less 90,000 is $20,100. Okay, that's the amount between, that's the amount of that $30,000 paycheck that they're responsible to pay taxes for, right? Because the amount above the $110,100 is not taxable, okay? And that happens to be, let's see here, out of 30,000, that ends up being $9,900, okay? So out of the 20,100, 6.2% is taxable. 2,100 times 6.2%. So the tax on the $20,100 is $1,246.20. So out of the 30,000, their deduction is going to be the $1,246.20. Okay. So I hope you understood that, and if not, then feel free to go back over this video. I mean, I realize it's long; it's 23 minutes, and we didn't cover. Let's see here. Yeah, we didn't cover the medical, dental, eye insurance, and other. So let me just quickly go over that. But this was the big thing, all right? When it comes to these other deductions, for the medical, dental, eye insurance, and other, these are all generally set amounts. In other words, when you look up your plan, you're going to have to pay, I don't know, $168 for medical insurance. Okay, for that per month. For dental, you might have to pay $13. For eye, you might have to pay $17. Maybe you have child support where you have to pay $250 a month. Uniforms might be $30. Okay, each and every one of these deductions would have a specific amount, and that would just add to the list of how much you would be paid. So, if I were paid $1,000 for the month, for the paycheck as my gross pay, maybe I had $300 for federal, $200 for state, $50 for local, Maybe I had $150 for medical insurance, $10 for eye, $10 for dental, and say $30 for uniform. Okay. These are all deductions, and whatever they total up to, let's see, that's 5, 6, 7, 750. Right, so that's $750 of my deductions. And that means my net take-home pay I would receive in a paycheck, my net pay of $250. Okay, so that's how the deductions work. All right, and I'm going to stop here, and then we'll go over the net pay.